It's all starting to get a bit quieter as we get nearer to the 25th of December, but there's still enough going on to keep investors on their toes as we head towards the big day. Now on the macro side, keep an eye open for the GfK UK consumer confidence number on Friday the 23rd of December, and US durable goods orders and new US home starts on the same day. All three of those data points will give some insight into the state of the economy on both sides of the Atlantic. On the corporate front, the big challenge is to see if anyone's going to be naughty enough to slip out a profit warning on the morning of Friday the 23rd in the hope that no one will be looking. Well, you and I will be for starters, but besides that, the piece of company news most likely to cause a fuss in the week ahead is the full year results from cruise ship giant Carnival on Tuesday the 20th. Now, as we can see here, the shares, which trade in both London and New York, well, they've bobbed about higher of late. Now, this represents a welcome recovery from a choppy run in the first half when fears over weaker demand due to terrorist attacks and the Zika virus and excess cruise ship building across the industry all hit sentiment towards the P&O operator. Improved consumer sentiment may have helped the shares a little bit since. Note here the relationship between monthly US consumer confidence data and Carnival's stock price over the past decade. This next graphic runs the monthly GfK UK consumer confidence figures against Carnival shares over that same time frame. I guess this all makes sense. If people are confident and feeling better off, they may be inclined to shell out on a nice holiday. Conversely, they'll be less willing to spend if they feel life's getting that bit tougher. September's third quarter statement also helped to steady the ship, if you'll pardon the expression, when Chief Executive Arnold Donald raised full-year earnings per share guidance from $3.25 to $3.35 a share to a range of $3.33 to $3.37. That compares to $2.70 a share a year ago. Such optimism contrasted with more gloomy comments from international rivals Norwegian and Royal Caribbean, so let's see what Donald has to say this time around. Check out the headline earnings per share figure and also any guidance for the new fiscal year. Operationally, pay particular attention to net revenue yields in constant currency, up 2.7% at the third quarter stage, and costs per available lower berth excluding fuel, which fell 0.2%. It'll also be interesting to know any comment on fuel costs now the price of crude has gone back above $50 a barrel, as the share price does seem to have welcomed the drop in oil prices. Note the apparent inverse relationship between the share price and oil over the past year or two. Perhaps this helps to explain the link between consumer confidence and the stock as well, as lower oil and fuel prices are effectively a wallet and purse boosting tax cut. As a final point, watch out for comments on bookings, trends and pricing, both of which look to be going the right way with the third quarter figures. Now, thank you for watching, and since this is the last edition of this video before the 25th of December, may I wish you all a happy Christmas and a very prosperous new year. See you in 2017.